Hey, what's up there? This is Cody, and I'm here to bring you another Bitcoin monthly from ARK Invest. This is the Bitcoin monthly for the month of October. And just like every other video I've done with this, we're going to go ahead and we're going to talk about all the important points they highlight here, and then I'm going to summarize them afterwards. And so we're going to get into what I think is probably the most bullish Bitcoin monthly report yet. But before we get to that, be sure to subscribe, be sure to hit that like button, and be sure to share this video and follow me on X. We're going to get right into it. So we have, as usual, the summary. Okay, so some of the more important parts they talk about here: the Bitcoin price increasing to past its 200-week moving average. We're going to cover that in a little bit here. That was basically a heavy resistance, and then the cost basis of short-term holders as well. And on top of that, now they're also talking about a potential rate reset. Now, when we talk about rate resets, we're talking about for the Fed. And basically, we're seeing the possibility of the Fed decreasing or at least holding rates where they are as likely in the future. And then we're also going to be covering some of the macro issues on the back end here when they talk about the macroeconomy and what ARK Invest expects from the macroeconomy and how that's going to affect the Bitcoin price. So we go straight into the Bitcoin network metrics here. And most of these, we haven't really seen much of a change here. Transaction volume went back to neutral again. The only thing that is currently bearish, that got downgraded to bearish, is the time-weighted turnover. It seems like that has slipped into a more bearish stance for according to ARK Invest. But otherwise, everything else is fairly bullish. We have mining difficulty, amount of revenue, active owners, long-term holder supply, and locked supply, all very bullish. So this is something that we should all be aware of, especially when we talk about what the holders are doing. And I've talked about the long-term holder supply quite a few times and how incredibly important that is to the overall Bitcoin economy. Next, we're going to go to the metrics for Bitcoin, the long-term valuation, the short-term valuation, and the market sentiment. These are all bullish except for the sentiment here. They're saying the perpetual futures basis is now downgraded to neutral, all right? And we're going to talk a little bit more about futures here in a little bit. We're going to talk about the discussion of the open interest, so we're going to get right to that. Next, we're going to be talking about the important resistance in October. So they specifically point out here those two key levels that they've been paying attention to, which is the short-term holder realized price and then the 200-week moving average. Both of those have been some serious resistance points for Bitcoin, and Bitcoin has climbed above those resistance points and has actually broken out very strongly above those resistance points. So as a reminder, the 200-week moving average is about 27,800, and then the short-term holder cost basis is about 28,757. Okay, so we've pushed above both those levels, and ARK is basically saying that this is bullish because you're clearing those resistance levels, and I would agree wholeheartedly. Next, they go to what they call the AVIV, the active value to investor value ratio. Okay, so basically what this does is it divides the active capitalization of Bitcoin by the cost basis of the investor cohort. And when this equals 1, those investors in the secondary market are at break-even levels. Okay, so what we've seen here is that it's actually pushed above 1. Okay, so that suggests that unrealized profits are at meaningful levels. All right, so this is kind of, I think, similar to what they talk about with SOPR. It seems like it's very similar to SOPR, the spent output profit ratio. And basically what it's showing right now is that Bitcoin, people who sell Bitcoin right now are actually at a profit. Okay, so, and it's a meaningful profit as well. So it's actually pushing above that 1 level. That's something ARK looks for to determine whether or not we've actually come out of the bear or the kangaroo market and gone into the bull market. And so far, we're seeing that is something that they're saying is that we could potentially be coming out of this bear market, this kangaroo market, and moving into the bull market. Next, they talk about the volatility levels. All right, so when we talk about open interest, okay, they're taking this off of Deribit. So we talk about open interest, we're talking about the futures market, okay? The futures market, the number of open contracts that we're talking about here. So what we're seeing here is a large difference. First, they mentioned in the put call ratio that basically they're saying that speculators are betting on a bull run in the first half of 2024 based on the fact that they're having more calls than puts, right? Calls are bets that the market's going to go up, and puts are bets that the market's going to go down. All right. So we've seen here in some of my videos, depending on the source that you're looking at, that the open interest has actually been fairly low. But again, it depends on what exchanges you're looking at. In some cases, I went on CoinGlass, and I've actually seen CoinGlass that the open interest levels are actually much higher than they are in other exchanges. Okay, so right now, ARK's just saying basically this is a neutral view, but the important takeaway from this is the fact that that speculators, people who are buying these futures contracts, are betting on the bull market in the first half of 2024, and that seems to be due to the fact that we're having the halving coming in 2024, probably April, May, and they're betting on a bullish start for the year. Next, they go through the long-term holder realized return. So they talk about long-term holder SOPR. And again, this is a good measure of how the profitability of long-term holders are. Now, for them, again, they define long-term holders as people that have held coins for 155 plus days. And so far, what we're seeing is some very nice profits for those long-term holders that are selling right now. And again, just like we talked about before, this can signal the start of a bull market and the move away from a kangaroo market or a bear market that we've had in the past year or so. So right now, they're saying that it's above that one, okay, and that basically is a bullish indicator for Bitcoin's price. Next, they talk about the primary trend and comparing that to previous market cycles. This slide is so incredibly important when you consider the fact that if you put this current cycle up against the previous cycles that we've seen so far, they have 2011 to 2015, 2015 to 2018, 2018 to 2022, we can see that we're still in the very early stages of the cycle. And again, they have the market cycle returns as a percentage here. And so far, what we're seeing is the fact that the other years, Bitcoin has been up much higher than it is currently. And you tend to see that it tends to go up pretty nicely in the preceding months after the halving. They also say that in the previous cycles, the Bitcoin price topped 2 to 3 years after its cyclical low. Now, if you put that in context and say that the low was back in November of 2022, that would put us in a path for about November of 2024, 2025, somewhere in that time frame. And that would be according to the normal Bitcoin cycle when Bitcoin, the price would peak and then it basically start to come back down again. So that's what they're looking at right now. And so if that's the case, we're still very, very early in this potentially start of the bull market. Okay, now they're going to move on to the macro, and they're going to say, what about interest rates? Okay, so they're saying that fiscal and monetary policy are in a state of a tug of war. All right, so thing is, on one side, you have the deficit expanding and the government spending a bunch of money, and that's basically going against the monetary policy, which is the Fed and the incredibly high rate hiking cycle that we've seen. So you have two forces that are diametrically opposed, moving in opposite directions. And what they're saying right now is that this is basically neutral because the government is spending more money, and at the same time, the Federal Reserve is making money more expensive to obtain, okay, through financing. Next, they talk about the M2 growth, or basically the money supply. Money supply has contracted just massively. We see here as a percent, it went basically here from 25% all the way down to almost negative 5%. And so it's been contracting, and that, according to ARK, means that it's likely we'll see rolling recessions. We've seen it in housing and auto is what they're saying, and they're going to say that basically it's going to hit other sectors and it's going to lead to a recession, this contraction of the money supply, and it's at a level not seen since the Great Depression. So they have a bearish view on this M2 growth. Next, they talk about the commodity prices. Now, commodity prices have come down quite a bit, and you can see here in the chart that it kind of spiked at, I'd say that's probably like 2021, 2022, and then it came back down again. And so we've seen a huge decrease in the commodity prices, and that should translate into a smaller CPI or PPI. We should start to see inflation basically come back down again because commodity prices are coming back down as well. You can think about oil, you can think about metals and things like the commodities, wood, and things like that. They've actually come back down. And so that means that, according to ARK, this is very bullish because now we're starting to see maybe even a deflationary trend, and we should hopefully see that the Fed will stop raising rates and maybe even actually lower rates, which I do think they're going to be lowering rates next year. All right. Then they talk about the metals to gold ratio. Now, what they're trying to say here is based on a declining metals to gold ratio, gold's purchasing power is increasing, okay? And that means that inflation is likely to come down, okay? So that's what they're saying right here. They're saying that the metals to gold ratio is coming down, and the treasury yields should also be coming down, okay? So they're saying that treasury yields should be coming down as well, and when treasury yields are down, that tends to mean that risk assets and things like stocks and crypto, they should rally as yields come down, okay? Because as the yields go up, they're more attractive for people who want to buy fixed income, and less so for people who want to own assets that appreciate like Bitcoin or like stocks. So what they're expecting here is that the yield is going to wind up coming down in the future. Next, they talk about the change in the daily volume here. Okay, so what we're seeing is a mismatch in government statistics, not being able to capture how weak the economy is. And so they come out and they say, well, this is bearish because companies are reporting weak revenues, okay? However, government statistics are showing strong GDP results. Last quarter, we saw the GDP come in at about 5%, and so that's actually fairly strong compared to what they expect, especially in the past when we had prints of like 2% for GDP. Meanwhile, we have companies saying, okay, well, we're actually experiencing much weaker revenues than expected. And we're also seeing here the UPS, right, is also the delivery company is reporting lower delivery volume. Okay, so that's what they're reporting right here. Okay, so what they're saying here is that based on things like 3M as well, reporting that global organic sales dropping more than 3% year over year, that the economy is actually worse than the government's making it seem, okay? And then the U.S. unemployment, the strong U.S. unemployment is attributed to labor hoarding, okay? And so not actually a strong underlying market. So again, they're saying that this is bearish because of the government statistics not reporting the finer points of the economy, or maybe even obscuring some of these other signals from companies. Okay, so now we've come through the entirety of the Bitcoin monthly report, and so I want to go ahead and just give you guys a quick summary of my thoughts of this Bitcoin monthly report. So what I've seen so far is that this is a very bullish Bitcoin monthly report. Okay, we talked about Bitcoin clearing those resistance points, the 200-week moving average, for instance. And we've also seen some of the metrics improve. And then on top of that, the other Bitcoin monthly reports that I've looked at have almost entirely been bearish and negative on the macroeconomy. But now we're starting to see a little bit of a mix of the two. There's some bullish elements, there's some bearish elements. And I do think that this right now is probably the most bullish that I've seen ARK Invest get in Bitcoin when it comes to Bitcoin monthly. We'll have to see how things develop in the future, but I do think that this is a step in the right direction if you're somebody who believes that the bull market is coming, which I do think it is. All right, so that's all I've got for you guys today. Let me know what you guys think below, and if you want me to go ahead and cover something else, leave it in the comments below, and I will catch you guys in the next video.